Hello, everybody. Welcome to another edition of the 2-Minute Market Focus. My name is Todd Jones. I'm the Chief Investment Officer of Proprietary Strategies here at Focus Partners Wealth. Thanks for joining us today and hope everyone had a fantastic new year. Turning to slide 1, you can see just a recap of where we landed for performance in 2025. By all accounts, as we mentioned in December, a very strong year. International developed market stocks, that's proxied by the MSCI EFA index, up 31.5%. That does include dividends. It was a very strong year and standout, and one of the first years of this kind of magnitude of outperformance of international versus U.S. S&P 500 there in the purple line, up 17.7%. That's another, I would say, very exceptional year for U.S. large cap stocks. It does have a lot of clients concerned that can we repeat a third or fourth year of positive performance for U.S. large cap? I think we can, but we'll caveat here that with some other thoughts in just a moment. Small cap Russell 2000 index, that's the light blue line, up 12.6%. Just continuing the, I would say, historical pattern of underperformance of small cap versus large. Commodities having another strong year led by gold and industrial metals, up 8%. And then the bond market, U.S. aggregate bond index, up 7.1%. Again, a very strong year with some very unique dynamics occurring with the shape of the yield curve. But what I wanted to focus this episode on is what's going on within active management. I still continue to be very positive and have a very strong outlook for active strategies. Not to say passive won't do well, but I think active strategies conditions are right for outperformance. And one of the big reasons I say that is because capital has been flowing out of this sector for the better part of 10 years. You can see on chart 1, active U.S. equity mutual fund flows from 2007 down to 2025. And 25 is notable for the fact that this is the first year where $1 trillion of AUM has flown out of active U.S. equity mutual funds and into other things, whether that be passive or ETFs, things of that nature. And I think it just underscores the opportunity that markets have been a little more volatile more recently, particularly since COVID. That primarily is likely related to inflationary risks. But when there are fewer active managers making single stock selection on ideas, that tends to create a lot of dispersion and opportunities for active managers with prices moving around a little bit more rapidly. So we have a lot of underlying dynamics, I think, being driven in part by the flow dynamic, which you see in the chart here. I don't see this flow pattern discontinuing, and I think the only thing that'll rectify this is when we start seeing really massive outperformance in active strategies, which could be on the horizon. Just addressing an additional item that I continue to hear over the holidays or the break is are we facing an impending recessionary conditions? And certainly, AI sector has levitated a little bit, pulled most of the U.S. economy up, and by extension, the global economy up, and that's lifting earnings estimates and things of that nature. But also wanted to point out that banks are starting to get back into the lending business. And you can see this is a sample since 2000, but it holds back into the early 80s, which is that it's very hard to get a recession if banks are lending and lending in an increasing way, because what that's suggesting is that they see opportunities to provide or extend credit on decent terms. They do hold a macro view that the economy is not going to fall apart. And by that measure, not only is it the U.S. banks that are lending in an increasing way, but also it's European banks, which, as you can see here, has been a while since they've participated in the upswing here. So lots of factors at play here. I don't think that a recessionary risk is imminent. And yes, there are some measures that would suggest that risk is climbing, but it's still a very low probability in my opinion. Thanks for joining us. Look forward to speaking to you again sometime here soon. Take care.